Welcome to Bunnex Investment Group. This video comes as a reply to one of our subscribers' questions, which says, I suffer from analysis paralysis and it seems all other trading systems are very difficult. What can I do? So before we go any further, analysis paralysis is when someone goes in front of the charts and a lot of trading systems probably clouds out his or her judgment to an extent of not being able to actually find the correct bias or find anything in form of conclusion. So we'll try to answer this question with a more detailed, easy strategy that can help. But I would say if you're actually suffering from this particular effect, try to reset your mind right now before we go through the strategy so that it will actually have a place in your mind. But before we go through, make sure you subscribe to this channel if you haven't done so, as well as checking the notification bell icon so that you'll be notified each and every time we upload a new video. So we are going to explain this as the first thing. We are going to define market structure in form of levels counting. Then we are going to give out a theory called the pullback theory that will actually help you to know what to look for in the markets. And then last but not least, have some chart examples that will actually concrete whatever we have talked about. So if you have been following this channel, you know that we use the market maker method. We derive all our trading entries as well as teach the market maker method in our courses. So failing in trading sometimes comes from having too many variables to check. There is something that is actually trending right now online, the smart money, which is basically some sort of a subsidiary of the ICT trading methodology. But there are several trading variables or trading parameters in those particular type of trading methodologies. You'd say check this and check that. Is the rejection clear and so forth? The more difficult a strategy is, the more difficult it is to apply. So we try, even in our courses, the advanced course, we try to simplify as much as we can so that you won't have too many variables to check. So this strategy involves counting of levels on the H1 time frame only. You are going to count levels on the H1 time frame and from there try to find an entry point. So the pullback theory, which is actually the backbone of this particular strategy, states that a peak, right? By peak, we say it's also the same as a reversal point. So we are saying a peak is validated whenever it is coming from third level, right? A peak is validated whenever it is coming from third level. Hold that so that it will actually make sense in the next illustration of this particular theory. So we are saying a peak, which is this one, we validate a peak when it is coming from third level. So to come from third level, it means we need to actually count the levels so that we reach the reversal point. So this is 1, 2, and 3. And if you want to learn how to count levels, you may refer in our videos. It's unfortunate that we don't go very deep. You actually probably need to go into our advanced course. It's actually going for $99, which is a lifetime access. So from there, 1, 2, and 3, we reach a reversal point, which is a peak, and this will be a valid peak. After a valid peak has been issued, our entry will be at the pullback point and exit at around 50 pips, right? So the analysis steps becomes the first one, count H1 levels to reach a peak. 2, wait for the peak to lock, right? This is now to simplify and see where the pullback is going to be terminated and have an exact entry point, which is actually a systematic approach. Then entry is a retest of 50 EMA after pullback, right? And then look to end 50 pips. I understand it might be confusing for now, so let's go over the charts for further illustration of the strategy. So this is Euro against JPY. I am going to start by the first. Let's actually mark this point as our starting point. That was in July. I'm going to count the levels so that we reach the peak, as we were saying. So we are trading away from the peak. So counting the levels in using the methods that we use is actually the first level, the second level, and then the third level, we reach the peak. After reaching the peak, what did we say? Let that peak log end our entry at 50 EMA retest. So it's peak log, shift, retest of the 50, we enter, we look to get 50 pips, right? Going forth, let's look for a peak. We are saying we had 1, 2, 3, 1, 2, 3, right? We always want to have a peak that logs and shifts, first and log, right? We had 1, 2, 3, but this peak did not shift and log, right? 2, and 3. So someone actually said, I draw these boxes the way I want. They are actually methods of drawing these boxes. These boxes are the levels, and there are rules that are used to actually mark these levels. Then a shift, right? A shift, retest of the 50, which actually occurred at this point. Our entry will look to get 50 pips. Then again, 1, 2, and then the third one, 3. From there, a peak and peak log, retest of the 50, which is around this point. I don't know if we were going to be taken out with this structure, but as always, like any other trading methodology, we do not expect to get 100%. We are definitely going to have what we call losses, and losses are all part of the game. So depending on the number of pips, if we were going to be looking to have a 25 to 30 pips stop loss, we were going to be taken out with this particular retest because it actually went above the 50 EMA, right? So we had 1, 2, 3. From there, peak log. After peak log, retest of the 50 at this point, and the market is actually going to the upside like that. So basically, that is what can help you remove this analysis paralysis. I hope you've been answered, and this is going to help you. So try this strategy and actually backtest more before you apply it on real charts. Settle with the losses that it may incur here and there, and then stick to the strategy. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.